The dollar versus Canada continues its waffle up and down in a swing area. I'll talk about the technicals that are driving this currency pair in this video, so let's get started. Looking at the daily chart in the month of October, you're seeing this up and down price action in a fairly narrow, very narrow trading range. To be honest with you, this swing area was defined by a number of different swing highs and lows going back in time. I'm going to bring us back to this point right here where it all started with the high price that came in right here at the high of the swing area near 1.39785. Then we came up to that into that area right here, fell short of the high, fell short of the high, fell short of the high. Then broke above to the upside, came down, tested the low, and created the low of this swing area right through here before moving to the upside. So it's defined at 139.28 to 139.78. Since then, we've seen different swing highs and lows. We moved it a little bit above it through here, but then rotated back to the downside. And if we look more at more recent price action, the price since the end of September and into October has seen the price move up toward the high of that swing area on a number of different times near 0.793978. We did move a little bit above it. You can see that in the hourly chart right through here. Here's that 78 level right through here. And in trading last week, the high price extended up to 85 in this one little bar before rotating back to the downside. So keep that area in mind, or keep this level up here at the 78 level as a key level. I think if we move above that level over time, that would increase the bullish bias. Have traders going through the 85 level as confirmation that the buyers are more in control. Now, looking at the price action this week, the trading range is very narrow. If I put a horizontal line across the low price that we saw in trading yesterday, and a horizontal line up at the high price also reached yesterday, the buyers had their shot breaking above this swing high right here, but could only get it into 1.3970, and the sellers had their shot on the break below here, moving to a low of 139.31. So 31 up to 70 is, well, about 40 pips. That's it for the week that we've seen in trading, and it's extended back into last week as well, last Friday. So there's not a lot of movement here. In between sits the 100 and 200 hour moving averages and the 200-day moving average. That's this step green line through here. Here's a 200-hour moving average down here, and what we could say in trading here today was the price fell below the 200-hour moving average like it did yesterday, but could not sustain the move to the downside, and we've come back down toward that 200-hour moving average at 1.3942. If we move below it, it would open the door for further selling, and we'd have traders thinking about expanding the trading range below the 31 level and extending the range for the week above the 40 pips. It's just too narrow. We have too narrow a trading range. So at some point, we're going to get either a break to the upside or break to the downside, and you have to be aware of that. So watch the moving averages as barometers in between the extremes, and look for the break with momentum. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.